Right, okay, so good evening everybody and welcome. So at the moment you should only be able to hear me. You can't see my screen yet. That's because it's obviously not me that's going to be delivering tonight's presentation. So if you wouldn't mind just saying if you can hear me. We've been having a few issues with the internet earlier this evening. If you wouldn't mind typing in a yes if you can currently hear me, then that would be fantastic. That's great. Okay, so I'm delighted to welcome Noel Guilford of Guilford Accounting, who's here tonight to help you and me, because I don't know either, and I need to know it, understand the implications of the new EU legislation if you're already selling online or, of course, if you want to start selling online. So this is because we've been getting lots of questions both on our Facebook page, on our Facebook posts. We've been having them emailed in. We want you to know how this affects online selling. Hence, this is why we've decided to put on this special webinar to answer your questions. And I just wanted to let you know that, yes, we will have a replay. I will tell you where to get the replay at the end. If I don't, then remind me, but I am making a note to myself as well to make sure that I show you where to get it. And if you need any further assistance, then Noel will give you his details at the end of the webinar, plus he's going to hang around and answer your questions at the end as well. So let's hand over to Noel. Welcome, Noel. I will start passing the presentation over. So welcome, Noel.
Thank you, Claire, and good evening. So I think you're going to pass it over to me so that I can then, there we are. So, yep. So all about that, you will now be able to see a screen having EU VAT regulations will affect small businesses. And if you're all seeing that, then we're in the right place. And yes, the unusually dry topic of VAT has been in the headlines recently, has even been the subject of petitions to governments around Europe. And all of that because of a little known, that is until now, new EU rule that has changed the place of supply of digital and electronic services. And if that all sounds like a bit of gobbledygook, I will explain what that means as we go along. I think there's a couple of things really. Let me just tell you who I am, first of all. My name's Noel Guilford, and as you can see there, I'm the principal of my own accounting firm, Guilford Accounting. I'm a fellow of the Institute of Chartered Accountants. I was formerly a partner in a large firm called Deloitte, and as well as my accounting practice, I am a small business owner and I sell digital products. So this very much affects me as well as my clients, which is why I was interested to learn about the rules. Let me just get the boring bit out of the way. This legislation, interestingly, is still changing. As recently as this week, the government put out a paper actually changing one of the interpretations of the law in the UK. So it is something that I recommend you very much keep an eye on if it affects you, and hopefully before too long you'll know whether it does affect you. Just a caveat I have to give you is I'm not actually giving advice on this webinar. I'm not allowed to do that, but if it does affect you, please make sure that before you act, if you need to or you're not entirely sure what you need to do, that you take advice. So let me just tell you what we're going to cover. I'm going to run very quickly through the current VAT rules for EU sales. Most of you who are selling into Europe will know those already, but just for the purpose of making sure we understand where we're starting from, I'll just cover those very quickly. Then I'll tell you what is changing and why. Then we'll look at who it affects, and there I'm going to include if you are a non-EU business. I know we've got people with us tonight who sell into the EU but are not based in the EU, so typically a US company would be a good example. What do you have to do if it affects you? What this thing called VAT MOSS is that we've been hearing a lot about in the press. A couple of other issues, pricing, data protection, for example, that we're going to cover. Then down to the practical stuff, I'll go through what your options are if this legislation affects you, and give you some, hopefully some practical solutions that you can adopt for your business. Before we get into the current rules, can I just say that there's a lot being written about. There's a lot of webinars like this taking place. I was on one earlier this week where I have heard a combination of misinformation, scaremongering, actually some incorrect information given out. This is an area that, as I said, is still developing, is also quite complex, although I'm hopefully going to take some of that complexity away. So I guess what I'm saying is it's perhaps a good idea not necessarily to believe everything that you hear, and to make sure you do check it out for yourself if it affects you. And the other thing is that for those people who think, oh, this is all too difficult, I'm going to have to stop selling products into the EU, I'm not going to be able to comply, I hope you'll find by the end of this webinar that, as I said before, if it affects you, actually the actions you need to take are relatively straightforward. And so it is not nearly as challenging as perhaps it might at first appear. So let's get in firstly to what is VAT. This will be familiar to anybody in the UK or in the EU. Again, just for the benefit of those who might not be as familiar, that VAT, value added tax, is a EU-wide indirect tax on consumption. And that last point is the key point. It's a tax on consumption. So if you are a business selling to another business, whilst you charge VAT on the total amount that you have invoiced, you can deduct any VAT on the amount that you have been invoiced, and therefore the VAT is only on the difference. In the UK, all businesses are required to register for VAT if their taxable turnover exceeds £81,000 per annum on a rolling basis, but in the rest of the EU there are different thresholds and different rates. In fact, amongst the 28 EU member states, there are 75 different rates of VAT. If you currently sell products or services to the EU and you are registered for VAT and you sell business to business, then, as you'll know, you obtain the customer's VAT number, called VRN. You don't charge VAT. On your VAT return, you disclose the fact that you sold to an EU customer, and you submit a separate EC sales list telling HMRC who you've sold to and which countries they're in, and you put that customer's VAT number on that sales list. Suppliers to customers in the EU who are selling B2B will be familiar with that process. Nothing changes there. And the purchaser, so whichever EU state they're in, the purchaser then accounts for VAT in their tax return under the reverse charge rules, just as a UK company, if they were buying goods from the EU, wouldn't be charged VAT, but would have to disclose on their VAT return that they had bought something from another EU member state, and under what's called the reverse charge rules, they do not pay any VAT in their country either. I hope that's clear. If you are VAT registered but sell B2C, so business to consumer, then you charge VAT just as you would to a UK customer. You complete your VAT return showing the amount that you've sold and the amount of VAT that you've collected, and you pay that over to the Inland Revenue. But of course, because the customer is not able to recover the VAT because they're not VAT registered, they actually pay, in our case in the UK, 20% more for the product. So anybody buying from anybody who is a consumer buying from a VAT registered business is obviously suffering the VAT, which is obviously then collected and passed on to revenue. If you're not VAT registered at all, under the current rules, you don't have anything to do with that. This, however, will change from the 1st of January if you supply customers in Europe with digital services, and this is change. that the EU VAT, where digital services are supplied, is changing on the 1st of January from the place of supply, so for example the UK, to where which is obviously where the customer lives, rather than where the supplier of the service is based. So let me say that again, just in case that was confusing. So from the 1st of January, the place of supply is changing from where the customer lives, rather than where the supplier of the service is based. So at the moment, if a UK business supplies a customer in Germany, then the place of supply is the UK. That's where the supplier is based. That is changing, and the place of supply will be where the customer lives, in that example, Germany.
Noel,
so why is this
could
changing?
I just
Well, what's interesting is that
No, Noel, could I just ask you, we're getting a couple of reports saying that we're getting what sounds like mobile phone interference. So I was wondering if you could possibly turn your mobile phone off if it's anywhere near you at the moment, if that's okay. We're getting a few reports through.
Okay, sorry about that, Claire. Yes.
Yep, no problem.
It actually was off, but it was still in my pocket, so it's gone now.
Right, okay, no problem.
Hope that's better.
I'm sure it will be. Thank you, Noel.
Okay. So why is this changing? This new legislation has actually been around for a number of years. It's not, in that sense, new. It's just the fact that it is being introduced from the 1st of January. And the reason is that the EU wants to reduce what it calls the tax loss to member states, because mainly technology companies, and this is where the legislation came from, using foreign-based businesses to funnel their sales through low VAT countries. So the key targets for this were and are the likes of Amazon, Google, Skype, companies like that, who've taken advantage, quite legally, of low VAT jurisdictions in the EU, such as Luxembourg. I mentioned before that there are 75 different VAT rates in the EU, and they range from Hungary's 27% down to Luxembourg's 3%, which is what's called the super low rate in Luxembourg, which if you sell ebooks on Kindle, you will know is the rate that applies to an ebook. So at the moment, and obviously again this is changing, and if you do sell ebooks on Kindle, you'll recently have had quite a lengthy email from Amazon telling you that on the 1st of January the pricing of your ebook will automatically change. So whereas at the moment, if you price your ebook at, say, £5, you'll see that it appears on Amazon at £5.15, so they add 3%. On the 1st of January, everything else being equal, although Amazon are doing things slightly differently, but everything else being equal, that the price of that book that you've set at £5 would go up to £6. That's £5 plus 20%. Now that extra 85p that is now being charged to the consumer for an ebook is going to be a permanent cost to the consumer, but that money, rather than in the past, whereas the 15 pence, or the equivalent, was paid to the tax authorities in Luxembourg, the pound will now be paid to the tax authorities in the UK, because that ebook is now being taxed. The place of supply is where the customer is, i.e. in the UK, rather than where the supplier is, i.e. Luxembourg. So let's cover what digital services are, and I've got a couple of examples for you. So the legislation says that digital services are telecoms, broadcasting, and electronic services. You may hear the acronym BTE, Broadcasting, Telecoms, and E-Services. That's how it's been referred to. The problem is that just using the internet to facilitate trading doesn't necessarily mean that you're supplying e-services. Let me explain. So for example, on the left-hand side there, I said these are digital services. So images, so if you're a photographer and you take images and you sell, if you sell ebooks, PDFs, music, films, games, any downloadable software, Knitting and craft patterns would be an example. Amusingly, earlier this week, I thought it was amusing, an HMRC spokesman was reported as saying that a knitting pattern sent as a PDF to a customer in Europe was probably taxable under the new rules. What is interesting is if that was a UK supplier of knitting patterns and was a relatively small business, that supplier probably wasn't registered for VAT in the UK and didn't pay VAT, may not even have earned enough to pay income tax in the UK, but would still be subject to VAT under the new rules. Now those are all digital services if they're delivered automatically with little or no human interaction. And that phrase, human interaction, is actually quite important, as we'll see in a moment. So what are not digital products? So physical books, journals, newsletters, DVDs are not. So for example, if you put your, let's say your software on a DVD and physically put that DVD in the post to a customer in the EU, although the customer is getting exactly the same thing, that is not caught by this legislation because you're delivering a physical rather than electronic product. Goods where the order is processed online, so but it's goods not rather than services, and educational courses where the content is delivered over the internet. So let me try and make a bit of sense of those. So take the example of Jane, who supplies ebook covers to her customers. So Jane works from home, she supplies ebook covers, and her customers ask her to design either a bespoke cover for a new book, where she has to take instructions directly from the customer and she has to produce something specifically for them. So the point I made earlier about human interaction, that is not captured because the service is unique, and although she delivers it digitally, she has had significant human interaction in its preparation. However, were she to sell template ebook covers that customers can buy from her website, download, and then, for example, edit themselves, then those would be captured. John's an online trainer, so he delivers his online training via webinars. Now, where he and his customers are online at the same time, as we are now, that's not captured because of the human interaction. However, if he then makes a recording of his webinar or records a video of him delivering training, then it would be captured because that would be digitally supplied and there would be no significant human interaction. So it's not straightforward, and that's the key to understanding what it is you do and what category you fall into. And it's very easy to say, oh, I provide ebook covers, but as the example I gave there of Jane, it's quite likely that some of the work she does is caught, some of the work isn't. And so you need to understand which category your work falls into, and then obviously have a system for reporting that. Okay, who does it affect? Well, it's anyone supplying those digital services that we've talked about to non-VAT registered persons resident in any of the 28 countries of the EU. This is one of the subjects that has been both the subject of some debate as to what the rules actually mean and some disagreement even amongst experts, because technically under the rules it is not just consumers who it affects, because of course many small businesses and freelancers, particularly in the UK because of our high VAT threshold, may be non-VAT registered businesses. I suspect a lot of people who are with us tonight may have a small business that is non-VAT registered, but they are nevertheless a business. Under the rules, if you are receiving a service, and of course this applies to right across the EU, and you are not VAT registered, then you will be charged VAT. Some commentators I've heard have said, no, it only applies to consumers. If you are a business, even if you're not VAT registered, it does not apply to you. That is not technically what the legislation says. It is an area where, certainly in the UK, a lot of small business groups are asking for clarification from government and from HMRC. So that's one of the watch this space points that I mentioned before. There is a however here in terms of who it affects, because businesses supplying customers via an agent, for example an online marketplace, will be treated as selling B2B and will not be affected, although as I've said there, that is also currently the subject of some debate as to exactly what an online marketplace is. But I can tell you, for example, I gave you the example of Amazon earlier. Amazon will be an online marketplace. If you sell your ebook via Amazon, then Amazon will be treated as being your customer. You're selling B2B. You will not have to account for the VAT on your ebook yourself. Amazon will do that for you. And so it's important to understand that if you supply customers through an online marketplace, and obviously Amazon's a good example, but there's lots of others. Obviously, there's the people will sell through ClickBank, JD Zoo, those sorts of companies. You need to understand exactly if their supplies are going into to EU customers, whether they will be accounting for the VAT on your behalf or whether you will have to do so. Now, a question I was asked the other day was this: well, I thought as long as I was below the threshold I didn't have to charge VAT. And that is correct if you are only supplying your products or services to UK customers. And that's because the UK has a very high minimum threshold. It's currently £81,000. The problem is that there's no minimum threshold for the sale of digital services to EU countries, which means that small businesses in the UK that are nowhere near the UK VAT threshold could be forced, if this legislation applies to them, to register for VAT. So that's one of the first actions, and I'll come on and explain how to do that and what to do about it if it affects you in a moment. But that's one of the actions that small businesses who are not VAT registered at the moment may well need to take to become VAT registered and then register for these new EU rules. The other question that I was asked the other day is, well, I'm based outside the EU, does it apply to me? Well, I'm afraid the answer to that is yes. So US suppliers, companies in Australia, I know a lot of Australian companies supply digital products into the EU. Yes, it does apply to you. And in fact, there has been legislation on the supply of e-services into the EU for the last 11 years. Some of you will remember the VAT on e-services scheme, VOES, that well-known piece of legislation, which said that non-EU businesses could choose where they paid their VAT. Now, of course, when you've got a choice, you then look around to say who's got the lowest VAT rate, and of course everybody was saying, hey, where's Luxembourg? Because if we're going to sell product into the EU, if we set up our operation in Luxembourg and we can qualify for the super low VAT rate of 3%, we only have to charge VAT at 3% on our services. That means that we can keep the product as low, priced as low as possible for the consumer and make us more competitive. This is really what started this whole change in the legislation, when the EU bureaucrats realized that there were lots and lots of businesses registered in Luxembourg, and that Luxembourg was happily taking the 3% tax, whereas the poor old Hungarian government was saying, where's our 27%? And then we get to this legislation. Now, because we're still talking about non-EU businesses, they have exactly the same choice as EU businesses. So in other words, they already have to charge VAT and pay it to whichever jurisdiction they're based in. Under the new rules, they will have to charge VAT, but now like EU businesses, they will have to charge the VAT rate in the country in which the customer resides. And the way they do that is to register for MOSS, which we're going to come across and I'll explain to you in a moment, as a non-union business, so non-EU business, but the term that legislation uses is non-union business in any country. And of course, the likelihood is that if it's a company based in the US, Canada, Australia, and so on, that they will decide to register their business now in either the UK or Ireland, because obviously those are English-speaking countries. So both the UK and Ireland authorities are actually gearing themselves up to attract non-EU businesses to say, hey, come and set up your place of operation here. So what does that mean in practice? And we're still here looking at non-EU businesses. So for example, a US company can select one EU member state with which to register. I've suggested if they're English speakers, they'll probably choose either England or Ireland. And they'll declare all of the VAT collected on their digital supplies. That member state is known as the member state of identification. And once registered with a MOSS, which we'll come on to, the company will submit quarterly VAT returns to their MSI. So what that means is, for example, a US company that decides to make their place of operation their MSI Ireland will register with a MOSS, and I'll explain what that is in a moment, in Ireland, and will submit quarterly VAT returns to the Irish revenue, who will then distribute all of the relevant VAT that has been collected to the EU member states where their digital supplies were provided. So being non-EU based doesn't get you out of VAT on digital supplies. So how do you work out the place of supply? So we know that the place of supply is where your customer is based. And on the face of it, that should be relatively straightforward. But of course, when you're selling digital products, so where people are going to your website, and remember, this is without any significant human interaction, which is exactly what you want. You want people to be able to buy your products and services without you having to be involved in the transaction. So somebody is now going to your website from, let's say, Hungary. We'll keep with Hungary, and is downloading your PDF. Is buying your ebook that's available on your website, and you now need to capture that information because you need to be able to charge that customer the relevant the relevant VAT at the rate of tax in their country. So for example, if it's Hungary, you need to know that that customer is from Hungary, and you need to know therefore the tax rate in Hungary is 27%, and that's the amount that you need to charge them. And what the legislation requires is that you must obtain and keep two pieces of non-conflicting evidence. So that's the IP address, for example, the billing address, the bank account address of the Hungarian customer. Now, the problem obviously for UK businesses, particularly small businesses, is that at the moment that is not the information that we're collecting. In fact, we're quite happy not to know the address of our customer because they're going to download the product or service from our website. We really don't even want to know their bank account address. We just want to get their money. And so what this is going to require is that if this legislation affects you, then you will need to set up a system to capture those two non-conflicting pieces of evidence. I'll come on to that in a moment. And you must also verify it. So you can't just take somebody's word that here I am in Hungary, here's my Hungarian address, and here's the address of my bank. You must verify it using what the legislation helpfully calls normal commercial measures. And again, exactly what that means is not set out in the legislation. We know, for example, that something like an address verification service, which costs a lot of payment providers will subscribe to and will be able to give you access to would be a suitable commercial measure. But again, if this legislation applies to you, then you need to understand or determine how you're going to collect these two pieces of non-conflicting evidence. And of course, when they say non-conflicting, they then have to have a rule for if it does conflict, and if they do conflict, so even if you set up a system so that when somebody's on your website, they have to enter in, for example, their IP address and their billing address, and those pieces of information conflict, then you have to stop the sale until you can obtain some other proof of location. And of course, because people move about Europe a lot these days, you could well have somebody who's based in Hungary, who's, let's say, visiting Germany, orders something from your website while they're in Germany, and so what comes up on your website is their German IP address and their Hungarian billing address. And so immediately the system says, stop, you can't carry on, these pieces of information conflict. And so you've actually got to go back to that customer to find some other proof of their location. Exactly what you don't want to do, because of course hopefully you're tucked up in bed and you're selling to all your EU customers over the internet without you having to get involved at all. So not particularly helpful. And don't forget, if they are VAT registered, then you need to get their VAT number, because of course if that's the case, then you don't have to charge them VAT, and so ideally the customers you're selling to will be VAT registered, and obviously that'll make things a lot easier. But of course an awful lot of consumers at whom this legislation is directed by definition are not VAT registered. So as I say, the issue here is for most small businesses, particularly those that are not VAT registered, determining and then proving the place of supply will be the most difficult. We just haven't got the systems in place to do it, and until the end of this year, which in theory is the amount of time we've got, for most of us it's going to be impossible to put those systems in place if we decide to do it ourselves. It is still unclear whether the billing address validated by your payment provider is acceptable. Now clearly, logically, it should be, and one of the questions again that is currently in the process of being clarified is, will you accept that if my payment provider, PayPal for example, confirm that the billing address is an actual address of a person and it doesn't conflict with another piece of evidence, that that's acceptable. I think you can probably assume that that issue will go away, but right now don't assume that that would be acceptable. The reality therefore is that most small businesses are going to be forced to use what I've called here a third party. Someone like Taxamo or Xero, a plugin, I never know how to pronounce this, Zazier, Claire will probably tell us later, or an e-commerce platform. What is interesting is I blogged about this about a month ago, and I said, of course, like anything else, when there's an opportunity, then an entrepreneur will come in and find a product to meet that need, and that's what's happening. The likes of Taxamo and Xero in particular have got product that will meet this need. I heard only this week that that Xero are also meeting the need through their plugin. So, if it affects you, then what do you have to do? Well, you basically got two options. If you sell digital services into the EU, you can register for VAT in each EU country you sell to. Nothing to stop you doing that. 28 countries, you go and register your business in each of those 28 countries, and then complete a tax return, VAT return in each of these countries when it's required. I suggest that for most of us that's probably not feasible. Or you can register for this thing called VAT MOSS that I've mentioned already a couple of times. MOSS stands for Mini One-Stop Shop, and I'll explain how that works in a moment. Either way, whichever of those you decide to do, you will have to raise various formats of invoice for each EU country at their rates of VAT. Nothing in this legislation and nothing in VAT MOSS takes away the necessity for you to produce a VAT invoice, just as you have to produce a VAT invoice for a customer in this country. So you need to raise VAT invoices in the various formats of the various countries, EU countries, in which you operate. And again, just as you'll be aware, there are rules for what you must put on an invoice in the UK. There are similar rules for what you must put on an invoice in 28 EU countries. And if you register for VAT MOSS, you'll have to register for VAT in the UK even if you are below the VAT threshold. So let me say that again. So if you need to register for VAT MOSS, so that's the way you decide that you're going to do your sales into the EU, then before you can do that, you will have to register for VAT in the UK even if you're below the VAT threshold. So let's be clear. A business, let's say, turning over £50,000 in the UK isn't registered for VAT in the UK because they don't need to be. If some of their sales are, or in the future are going to be, into the EU, they will now need to register for VAT in the UK so that they can register for VAT MOSS. So what is it? Well, it's an online service for which you register. That's pretty clear. You do it all online. And what you do once you're registered is submit a single VAT return in addition to your normal one, because remember now you've got to be registered for UK VAT, and you submit that return on a calendar quarter basis. The return covers all your supplies to other EU states, together with the details of the customers that you supplied. So this is why you need to collect the information on who it is you supplied and in which country. HMRC will then send copies of your return to each member state you've supplied services to in that quarter and pay over to them the relevant VAT for their country. So your 27% that you've collected for the Hungarians, the 25% that you've collected for the Danes, and so on, right throughout Europe. You are required to keep records for 10 years, not 6 as in the UK under tax rules. According to the VAT legislation, for each member state, which does differ, but those records must be kept for 10 years, and they can be inspected at any time during that 10-year period by the tax authorities in whichever member state it is. So I'm sure the Germans will want to see your records. I doubt if the Italians will, but you must keep them for 10 years. And then you must file your VAT MOSS return within 20 days of the end of the calendar quarter. How do I register? Well, if you're already registered for VAT in the UK, you can go online and register for VAT MOSS straight away. It's relatively straightforward. The form is a bit clunky. I'm sure they'll make that a lot easier, but at the moment it'll ask you a number of questions, most of which you'll be able to answer, some of which you might find a little bit challenging, but essentially you go online and register for VAT MOSS. If you're not yet registered for VAT in the UK, so again the example of the business I gave that has a turnover of say 50,000 but sells e-books, images, e-book covers, DVD, well not the DVD but software into the EU, then you must register for VAT in the UK before you can register for VAT MOSS. To register for VAT in the UK, you first need to register and obtain a government gateway reference. Most businesses, if they have had any involvement with government for employing people or anything like that, will probably have been through that process and have a government gateway reference. If not, relatively easy to go online and get one. You then register for VAT in the UK. Now, I'm not saying that you need to charge VAT on your UK sales. You don't until you reach the threshold, 81,000, but you must still be registered. So you're now registered for VAT in the UK, and then you can then go online and register for VAT MOSS. And if you're not yet registered for UK VAT, and this legislation does affect you, please do this straight away, as it'll take you several weeks to get your UK VAT number, which you need before you can register for VAT MOSS. You do have until the 31st of March, although this comes in on the 1st of January. The first quarter obviously ends on the 31st of March, and so you have until the 31st of March to register for VAT MOSS. But of course, you will need to keep records of your EU sales from the 1st of January. There are just a couple of other issues that I wanted to cover off before we look at some practical solutions. Given that you're going to be collecting proof of customer locations, so for example the address of a consumer based in the EU, and that's personally identifiable information, you may be, and I've only said maybe here because the Information Commissioner's Office have not stated specifically whether or not the new rules will make registration necessary, but most commentators who I've listened to and spoken to believe that this data will be data that you're required to register as for data protection purposes with the ICO. Again, not particularly onerous. It only costs £35 a year to have your annual license, but again, another thing that small businesses may have to deal with. This issue is probably the single biggest, because what you're now facing is a pricing decision. So nothing to do with tax, nothing to do with registering for anything. The question you're going to have to ask yourself is, are you going to add the relevant country VAT to your prices and let the customer pick up the cost, or swallow it in your margin? So for example, if you now recognize that if you sell your products and services to Hungarian consumers, and you will have to account for 27% VAT, and let's assume at the moment you're not charging them anything, or you're an ebook supplier and you're charging them only 3%, then one way or another you're going to have to decide what you do with your prices. Are you going to put them up, or are you going to leave them as they are and swallow the margin? What are your competitors going to do, and how are you going to deal with the obvious problem that we all have when selling products is, well, why has that suddenly gone up? Because last month it was only this price and now it's 20%, for example, or 27% or 25% higher. And it's interesting to look at, I said there, what would Amazon do? Amazon I mentioned before because obviously they're one of the examples of one of the companies that the EU were trying to have a go at, to try and get people buying Amazon products to pay more VAT in Europe. And I won't go into the detail of what Amazon have done. Those of you who sell ebooks to Amazon will already know, but Amazon have taken quite a formative stance and have written to all their ebook suppliers and told them exactly what they're going to do. They're not going to now charge, they're now going to include the VAT in the price. So whatever price you set for your ebook, that will now include your VAT at 20%. They will no longer add on the 3% and then pay it over. So it's up to you to determine what price you want your ebook to be sold at, and remember that that will be inclusive of 20% VAT, or indeed whatever the VAT rate is in the country that the customer is resident who buys your ebook. There is another issue for non-EU businesses. Very quickly, I'll cover this. there will no longer be the VAT rate arbitrage advantage after 2015. But what is interesting is that it may complement your data protection compliance, privacy compliance, to have a VAT and privacy establishment in the same jurisdiction. So it is worth thinking, if you're a non-EU business, given that any data that you collect through the new EU VAT rules must be stored in a server within the EU, then an existing establishment, and this is why a lot of I mentioned before that both the UK and Irish governments are saying come to us, is that to be able to have your MSI and your server where you store this information in the same place may well be an advantage. And obviously that only applies to non-EU businesses. If that sounds a bit technical and you're an EU business, then you don't have to worry about that. But it is something that non-EU businesses may well want to consider when they're deciding where they want their MSI. So what are your options? Here we get down to, I suppose this is what, after a rather lengthy discussion of the rules and why they're coming about, then what can you do? So what I'm suggesting here is that you've got 7 options. In fact, I'm not suggesting that they're all viable options, but they're here for completeness. So if you are already registered in the UK and you collect BRNs, VAT numbers from your EU customers, then really all you need to do is register for VAT MOSS and collect the extra data. And the reason you need to do that is because you don't know whether or not somebody who buys from you is VAT registered or not in their country, and so it may well be that if they can't give you a VAT number, then you do have to charge them VAT. So you may need to upgrade your systems or use a third party, as I suggested before, but it's going to be relatively straightforward, and I'll talk in a little bit more detail when I come and look at some of the practical solutions, what the third party can do for you. The other thing you can do if you register for VAT and you're not VAT registered at the moment. So number 2 here is if this is somebody who is not currently VAT registered in the UK, you register, then you separate out your UK business and your EU business. Technically it's called business splitting, and then you register for VAT MOSS. So in other words, you've got to keep separate records of your sales to UK businesses and consumers who you're not going to charge VAT to, and your EU business, so the consumers who you are going to charge VAT to, and then you register for VAT MOSS. Thirdly, you could sell exclusively through an intermediary platform. You may say, no, this is all too difficult for me. I am only going to sell my products through an intermediary, through a platform who will deal with who will handle all the sales for me and account for VAT. I put a note there, you'll note PayPal is not one of those. PayPal is a payment provider. They're not a marketplace. But it may well be that if you only supply a third-party marketplace and that's all you do, you don't accept orders directly, then they will handle everything else for you. They will raise the Hungarian and Bulgarian invoice and charge the right amount of Bulgarian VAT. You don't have to worry about that at all, and I suspect that that will be a route that a number of suppliers will go down, provided, of course, they can find a marketplace that actually wants to deal in their particular product. Once you're registered, and this isn't really an alternative here, but once you're registered, what I suggest is that you use software that identifies the customer's location and applies the correct rate of VAT. There will be an increasing number of these coming to market. We've seen a number this week. That one I mentioned earlier on, Xero is one such piece of software that will enable you to collect the data on where the customer is located and then raise the appropriate invoice and charge the correct amount of VAT. You could stop selling digital products in the EU altogether. When this legislation first started being talked about on social media and online forums, a number of people said, I'm going to stop selling digital products in the EU, it's not worth it any longer. Interestingly, that may be illegal. I'll explain why in a moment. You could register for VAT in each EU country, as I explained before. Again, I suspect that that's not practical for most of us. Or you could ignore the rules altogether. I'm not obviously recommending that, but someone did say to me that that's what they were thinking of doing, so I thought at least I should include it here for completeness. However, I strongly recommend you do not ignore the rules. The penalties for non-compliance are quite significant. So why wouldn't you choose not to sell in the UK? So somebody, I won't sell in the UK, I'm going to stop selling in the UK. Well, I mean, clearly the first thing is it commercially sensible? The EU is a huge market. It's very easy to, and we need to be clear here, whilst it may be getting a little bit more difficult, at the moment it is incredibly easy to provide digital services to EU customers. And so is it really sensible to say I'm not going to sell in the UK? I would suggest for the majority of businesses it's not. What is interesting is that there's a thing called the EU Services Directive that says that we must not discriminate against EU consumers with regard to their nationality or country of residence. So in other words, it could actually be discriminatory not to offer your services to other EU consumers. Now there is a get out. You can, if you've got an objective reason to do so, then you may well have a reason that would stand up to scrutiny. Although again, it's interesting that the guidance says it is not possible to say in general terms what reasons are objective. So basically you would have to come up with a pretty strong reason if this was the route that you decided to take. A couple of tips. If you do register for VAT MOSS and you're already obviously you're now VAT registered, and so you've got to complete a UK VAT return. At the moment, the legislation says that a VAT MOSS return must be made each calendar quarter. Now, obviously, if your VAT quarters are not calendar quarters, you don't want to be completing VAT returns for 8 months of the year. You want to keep it just to 4. So if when you register you select supplies of digital services below the VAT threshold under MOSS arrangements, then HMRC will actually align your VAT periods so that you can complete the UK and VAT MOSS returns at the same time. It might be only a small simplification of the amount of work that you need to do, but if you do register online, do tick that box. And as I said before, do remember that you will need to file a UK VAT return each quarter, even though it will be nil if you're below the threshold. So here's what I suggest. Unless your EU sales are negligible, then register for VAT MOSS. It'll be a little bit inconvenient to get your government gateway and register for VAT in the UK and set up a system so that you can collect all the information on and do your split billing. But ultimately, it'll be a one-off exercise, and once you've done it, then all you'll have to do is make sure that you keep the records and send the returns in each quarter. If you only sell through a marketplace, or if you decide to only sell through a marketplace, then and you are confident, and obviously that marketplace will tend to be a large business, and so you can be confident and check with the UK HMRC that marketplace is recognised as a business that is doing all the accounting for VAT. Then, although it means giving away some of your margin, it may well take away a headache that you'd rather not have. I suspect for most businesses, and this is the one that we're going to adopt, is that we will use software that identifies the customer's location and applies the correct rate of VAT. I've mentioned 3 such pieces there. I'm not recommending any of them in particular. We're not associated with any of those. We do use Xero accounting software, but we've got no financial interest in promoting any of those three suppliers, and there will be others coming to market. I suspect over the next few months we will see other companies bringing similar products to market, because frankly I think this is really the only way that that a sensible business that wants to keep supplying EU customers is going to find it's cost effective to do so. And I mentioned pricing before. Again, what I would add here is just that when you're looking at your pricing, if you're going to be using one of these services, then frankly just build it into your pricing. Whether you decide to take the hit or whether you decide to increase your price, then don't forget the vast majority of your competitors will be in exactly the same position and probably doing a similar thing. And finally, you might decide, and I do know of some businesses that are proposing to take this route, to restrict their sales into the EU. And this is the one where I talked about you've got to have an objective reason, and the only one that I've come across so far that seems to be holding much water is that if you believe that you've got significant intellectual property in your product or service, and that it is not protected sufficiently strongly outside of the UK, and therefore you may be subject to having your IP stolen or copied, then that probably would count as a significantly strong objective reason. And I've suggested there that if you do decide to go down that route, that you add a warranty to your terms and a condition that the purchaser confirms that the place of supply is the UK, and so that they are not an EU business. I don't think many businesses will choose that route, but there may be some. Okay. I mentioned Xero earlier. I spoke to Xero earlier today, and this is what they had to say. They are introducing an upgrade to their software. I know a lot of you will probably use Xero accounting software, so I thought it would be interesting for you to know what they're proposing. You will be able to create the necessary VAT rates for each member state for which you supply customers of BTE. So BTE that's Broadcasting, Telecoms and E-Services products. They will be able to provide, or you will be able to produce using Xero purchase invoices. You'll be able to produce sales invoices, credit notes, receive money using these rates, and so on. And it will produce both the normal VAT return without your EU sales included, as well as your VAT MOSS return. And provide you with the information necessary to produce your VAT MOSS return. I shouldn't say that it will complete your VAT MOSS return for you. No one has yet seen a VAT MOSS return. We don't actually know what they're going to look like yet, but this will give you the information to go onto your VAT MOSS return. So as I said earlier, I think the likelihood is that given an opportunity, there will be companies coming into this space to offer solutions to small businesses. And when I said earlier, it's not time to start panicking. This is legislation that, in my view, is here to stay. There is a lot of online chatter about petitions and getting governments and the EU to relax this legislation or change it. My own view is that that's not going to happen. We may see some slight relaxation. The EU have actually said that they're looking to introduce similar legislation to physical products in 2016. So it's quite unlikely, in my view, that this will go away. The UK, in our revenue, have said that VAT MOSS compliance is almost impossible for a micro business, with the need for systems upgrades, data capture, the need to provide various formats of invoice and so on, and that the best solution is to use a third-party provider, and I would wholeheartedly endorse that. If any of you need any help, we're offering at an unbelievably attractive price to help. If you need to register for VAT MOSS and would like some help, I've got two packages available. One is full registration for VAT and VAT MOSS, which we will do for you for £97 plus VAT. If you're already registered for VAT in the UK, then we'll register for VAT MOSS for you for £47 plus VAT. Just email me, vat@guilfordaccounting.co.uk, telling me which of those categories you fall into, and I will send you a questionnaire with all the relevant information you need to give me to do that for you. Although, as I did say, it is not unduly onerous. It's probably only if you need to register for VAT first before you register for VAT MOSS. I really would encourage you to get on with that, because it does take several weeks, and obviously we're coming into a time of year when things do tend to slow down a bit. That's all. I hope that has been helpful. I'm very happy to take any questions from you, and I do hope that all of you to whom this applies manage to sort out the best solution for you, and one that you can implement without too much difficulty, and certainly without too much cost.
Yeah, fantastic. Thank you very much, Noel. Okay, so we've got lots and lots of questions that have been coming through. So if you typed your question earlier in the session and Noel hasn't already answered it during the course of the presentation, if you wouldn't mind retyping it, because we've been getting lots and lots of questions coming through. Right, okay, so I will try sending it to you in the chat box, Noel, and if you can't see it, let me know and I will read it out instead.
Okay.
So I'm just trying to copy this question. In fact, it might, but to tell you what, it'd just be easier to just read it out, because for some reason my screen's not playing ball. Okay, so Paul says, I am not VAT registered and sell framed portraits, canvases to UK-based portrait clients. A commercial UK-based client can download images from my site, and my stock images are available worldwide through the image file. Where do I stand?
Okay, well, it sounds to me as though we may well have two businesses there, one of which is caught by these rules and one which isn't. The stock images, if there are stock images on your website that any purchaser, wherever they are in the world, and obviously we're talking here about the EU, so let's restrict it to that. So if somebody in the EU can go to your website and pay for and download a stock image, then you will be caught by this legislation, because there's no significant human interaction, and the all of the transaction is undertaken digitally.
Yeah. Okay, fantastic. Thank you. Okay, then Ian says, will it be necessary to collect all of the personal information for every single customer so you show that MOSS doesn't apply to them?
No, Ian, not every piece of information. If you collect their VAT number, in other words, if they tell you that they are VAT registered in their particular member state, then that's your get out, because you now know that they are VAT registered, and again you can check, and you would have to check that that is a valid VAT number. You can't check that it is that particular individual's VAT number, but through the EU database you can check that that is a valid EU number in that country. So provided they give you the 2-digit country code before their VAT number, obviously ours is GB, and you check that that is a valid VAT number, then you don't have to charge them VAT, and you don't need to collect the rest of the information that would be required for VAT MOSS.
Right, okay, fantastic. And then what if they were a consumer? Would you have to collect information on consumers to prove that, even if they were in the UK?
Okay, well, as far as consumers in the UK are concerned, obviously you're just that's under existing rules. You're supplying where obviously the place of supply isn't changing, because the supplier and the customer are in the same jurisdiction. If you're supplying to if an EU customer can't provide you with a VAT number, i.e. they're not VAT registered, then they're either a consumer or they're under the threshold in their particular country. then that's when you must obtain the two non-conflicting pieces of information and then confirm those to satisfy yourself that they are entitled to the VAT, the particular VAT rate. So that, for example, what the EU wanting to do, they want to make sure that that everybody in Europe suddenly doesn't decide that they live in Luxembourg.
Yes, which does sound quite attractive. Yeah, fantastic. Okay, thank you. Right, so Karen says, I'm a new startup with one coaching client at the moment, but I will be offering ebooks and then video challenges. So what would I need to do?
Okay, Karen, well, again, you probably fall into the category a bit like the gentleman, John, who I used for example earlier, that it sounds to me that if you're doing coaching now, and I don't know exactly what you do, but let me assume that you do online coaching and where you're actually interacting with your coachee, then you are not caught by these rules, because again, I'm assuming here that each individual client's circumstances are different, and therefore you're giving them bespoke coaching. If you provide some online coaching resources that would be available for a consumer to download into there, and those are available to anybody. You put them on your website, and if somebody goes onto your website and pays the appropriate charge and then downloads it, that, I'm afraid, would be caught. So I think you're exactly in the situation that I mentioned before, of having a business, part of which is not caught and part of which is. You would need to separate out the bit that is caught and record those sales separately and register for VAT MOSS. Let me just say something I didn't cover in the, because we could have gone all night if I'd covered every single thing, but it's perhaps worth mentioning as Karen's asked that question, is that there is a debate going on that somebody who perhaps supplies a service that falls on the side of the line that says there's not significant human interaction could actually, by changing their method of delivery or changing their process, make it something that where there was enough human interaction to argue that they were not caught. Now, my own view is that will probably apply to not very many people, because as I said before, the whole reason that we use the internet to supply our products and services online is because it's the old thing of you can make money while you sleep, and so not a lot of people are going to want to start adding a personal element or bespoke element or human element interaction into their product or service, because it in some ways, well, to a large extent, does away with the advantage of having an online business. But it does sound to me, Karen, as though if your coaching clients are ones who you do bespoke coaching for, that won't be caught. But if you got if you sell to consumers who can just download from your internet products that anybody can buy, then you probably are caught.
Yeah, fantastic. Thank you. Okay, so Howard says, how does it affect affiliate marketers selling products from the US through ClickBank, which is, I suppose, technically would be classed as a marketplace? So who would be responsible for the VAT collection, do you think?
That's a very good question, and my understanding is, and I use those words advisedly, that my understanding is that ClickBank will classify or will qualify or will be a marketplace for EU VAT purposes. That means that the ClickBank will need to have an MSI, so in other words they will need to register in one of the EU member states, and then if you are supplying if the product is being supplied via ClickBank, ClickBank are the supplier of the product, you're supplying ClickBank, and therefore you are supplying B2B. So even if, let's say ClickBank decide that, and I don't know where it is, whether they've done this yet, but if ClickBank set up, say, in Ireland and have Ireland as their MSI, because ClickBank will be VAT registered in that jurisdiction, you will be supplying B2B, and you will not have to charge VAT on your on your product. But if ClickBank are selling that as they would be to the end user, then they will have to account for the VAT.
Yeah, brilliant. Okay, so Jonathan says, if you sell subscriptions to online content through your website, how would you display different prices in different countries? So I'm imagining that this is what one of those third-party plugins would do. Is that right?
Yeah, absolutely, Jonathan. Yes, anybody with a membership site, and this is why I said that that's the route that we're going down. Anybody with a membership site where they've got members throughout the EU, I can't see really any alternative to them but using one of these third-party platforms, because the way it'll work is that if somebody logs on to your membership site from Germany, and as soon as they put in their details, the software will then do a search and find out that they are a German business or consumer. If they're a German business, or it'll then ask, do you have a German VAT number? If they do, and they input it, then, and I think this is going to be automated, I think then the software will then automatically look up this database I told you about and say, yes, that's a valid German VAT number. You don't have to go any further. If they don't have a valid, or if they're not VAT registered in Germany, it will then give them the price and the billing details and the VAT in their local currency, and will produce the relevant VAT invoice, presumably in German.
Yeah, yeah. Brilliant. Okay. Susan says, I'm based in France. Can you just confirm that VAT MOSS exists in all the EU countries to avoid registering in every country?
Yes, it does. There's exactly the same legislation in France. The French are actually calling it VAT MOSS.
Of course, yeah. Yeah, brilliant.
But no, whichever European country you're in, I mean, it's actually a good point that you asked there. Yes, this is EU legislation. Some people have been having a go at HMRC and saying this is ridiculous, this legislation. All we've done in this country is to adopt EU legislation, which of course at the moment we're required to do. And so, but exactly every other country in Europe has got exactly the same position and has got its equivalent of VAT MOSS.
Yeah, brilliant. Okay, then Kevin asks, with a blended product, as in part of it's digital and part of it's non-digital, where you charge one price for the whole thing, do you need to charge VAT on it? Now, my understanding was that you don't need to charge VAT on it as long as you've got a human element in the product somewhere.
I agree with you, Claire, and this is again I didn't cover this specifically, but this is one of the areas that is still subject to some difference of opinion. There is an opinion that if there's a human element and a digital element, I'll call it that, then you need to separate the price between the two. But if you charge one price for the whole thing, how do you do that? Which bits are worth? And so the likelihood is that people who, even though some of their content or some of their services are, if you like, downloadable without any significant human interaction, but there is then an opportunity for human interaction. So let's take the example of somebody who sells a series of webinars and invites people to sign up to a membership site, and then as part of the membership they get a monthly phone, they can join a phone conversation, however you do it, online. And you get your particular questions answered, and you can discuss in a group. You may have access to a private Facebook group, and so there clearly is human interaction if you can post a question. Now, some people have been saying, well, what you need to do is you need to put all of the price onto, if you like, the monthly phone call and give away the recorded webinar. Now,
absolutely.
I mean, well, you could do it that way, but I think the reality is that sensibly, if there is clearly human, that you would not, the consumer would not be purchasing this product if it was solely a downloadable video or a pre-recorded video, the reason that they're buying it and paying the price that they're paying is because there's human interaction. I think the tax authorities are going to have more to worry about than querying whether or not a particular product. And I think there will be queries over human interaction, but somebody who can clearly demonstrate that their product or service has an element of human interaction, I think, are probably going to be fairly low down the list of people who are challenged. I think the bureaucrats will be getting very bored if they can decide that those are the people they want to go after.
Absolutely. Yeah, okay. William says, what happens if they buy and then you find the data is inconsistent and your customer never responds to requests for more data?
Well, this is at the moment, what the legislation says, Jonathan, is that you must get two non-conflicting pieces of information, and provided you do that and you verify them, as I said before, using these normal commercial measures, then you've done everything you can. Clearly I mean, there are clearly going to be mistakes and there are going to be errors. I mean, these things never run smoothly, and again, it's a question of where the burden of proof lies. But if you have demonstrated that you have set up your systems in such a way that you can capture the two non-conflicting pieces of information, that you can ensure that if they do conflict, the sale doesn't go through until you've got either a third piece of information or you have clarified why they conflict. And you've done your best to confirm, to verify, to validate that information, then I think it's extremely unlikely that you'll be challenged. But yes, there will be mistakes. But again, as I said before, I think the people who are trying to comply and get it right won't be the ones who are in the firing line. It'll be the people who quite clearly are not validating and just accepting whatever is given to them, not even asking for more information if it conflicts, and not validating the information they're given. And that's why, again, my advice and my recommendation to people is use one of these third parties, because, again, if you're going through a third party and something goes wrong, you've always got that third party to fall back on and say, well, I did my best. I tried to use the third party. If this person got through the third party's firewalls and mine, then, hey, can I really be to blame?
Yeah, thank you. Okay, Helen says, you mentioned educational digital products. Is there any definition to educational? I offer stress management. Can that be classed as educational because it requires an understanding of physiology? So I imagine there's going to be a lot of questions like this actually coming up.
Yes, absolutely. I mean, that's a very good example of a product, a service that you need to look at very carefully and decide, are you, again, I go back to this point we've made once or twice already, this human interaction. If you provide, let's say, videos of that you've pre-recorded, dealing with stress management and explaining the physiology involved and how people can, which I assume you do, how people can manage their stress levels, and those are pre-recorded and available for download, then those are caught. If you hold courses where, let's say you're running a webinar like this and you've got people who are, so you're delivering either a webinar or a video online or a course online, and people can then ask you questions, that is not caught. And that's where I think you're probably again in the situation that we talked about before, where it depends exactly how you deliver your product, and it may well be that you fall into both categories. Some of your services are caught and some aren't.
Yeah, okay, so I can see, I believe we've answered most of the questions now, because some of them I could see were asking similar questions around about mixtures of live and digital interaction. So I think we've answered most of them. I believe there's one left from Tom about donations that I'm going to ask now. If we haven't yet answered a question, if you wouldn't mind typing it back in again, because obviously there is a lot of action and activity going on in the questions box. So Tom asked, what about websites that ask for a donation? So for example, you're actually collecting like a charitable donation. So for example, like WordPress collects donations. What will happen then?
I'm not an expert in this area, and so this comes with a huge caveat that if it applies to you, please check it out. But I mean, as a donation, either to a business that then passes that donation to a charity, or obviously a donation directly to a charity, those are not VATable supplies, certainly under UK law. So if you were to make or provide a service and say, pay me what you like, and there are, we know of some service like that, pay me if you think it's worth anything, or pay me and I'll make a donation. You need to be very clear that if it is a genuine donation and it is going to a registered charity, then I don't believe that would be caught. If it is a way of trying to clearly trying to avoid the VAT MOSS legislation, then I think you'll find that, and I'm sure there will be businesses who try that. I'm sure that very quickly that'll be jumped upon.
Yeah, brilliant. Okay, so
But
just add.
Donations, just to be clear, if it is to a genuine charitable organisation that's a proper registered charity, they're not VATable.
Yeah, brilliant. Okay. A couple more questions come through. Chris says, what happens to non-Euro businesses if they don't comply with the new law? How on earth are they going to enforce it and penalise for non-EU businesses?
Well, again, a very good question. I mean, I mentioned before that the e-services legislation for overseas for non-EU businesses has been around since 2003, and there has been a huge, I was going to say abuse, not necessarily abuse, just ignorance of that legislation. There have been, and we've probably all bought products online from non-EU businesses and not been charged VAT. I've noticed recently, probably some others of you have too, that when I bought a product that's from a non-EU business and it's priced in dollars, and when you put in your payment details, it converts to sterling and VAT is added. So the answer to the question is there are a huge number of businesses that the EU now recognize, non-EU businesses who are trading in the EU, that they're giving them the opportunity to register in the EU, to, as I said before, to get their MSI, to choose their jurisdiction, and there will be, or we're advised that there will be an increasing regulatory and compliance monitoring regime to capture businesses who are non-EU businesses who are selling in the EU but are not complying. Now, of course, the way that those actually have to be pursued is through the relevant jurisdiction. So in the case of, let's say, a US company that was not complying with the legislation, then it would have to be something that was taken up by the relevant whichever jurisdiction it was in the EU or the EU itself with the US authorities. And so it's not an easy thing to make sure that businesses are complying with. But if we remember that this all started with the EU saying, hang on, there's lots of EU countries who are not getting their fair share of tax. The tax is going to the low tax jurisdictions, the Luxembourgs of this world, and there are some people who aren't being charged VAT at all who should be. And so what we are going to see over the next few years is very definitely an increased compliance regime to ensure that that companies are complying. But it's a very good point. It's not going to be something that's easy to do.
Yeah. Yeah, brilliant. Okay, and then a couple of follow-up questions. Paul's following up on his question earlier about the images. So it's a commercial UK-based client who can download images from my site. So does that count? So I take it that was a follow-up to the earlier one.
Okay, Paul. Well, if you, as I say, it depends on what your turnover is. If you're currently below the VAT threshold in the UK, therefore you don't have to charge VAT. No, you can charge. You don't have to add VAT to your invoices. If your turnover is less than 81,000 on an annual basis and you're not VAT registered, no, you don't have to charge VAT. If you're selling to or likely to sell to EU customers, then you would register for VAT, register for VAT MOSS, but you would only have to charge VAT on sales to your non-UK customers.
Yeah, brilliant. Okay, then final question from Usher. I'm a startup business and I'm thinking of doing online webinars and courses, but I haven't started doing anything yet, so it won't be for a few months or a year. So should I wait to register or should I register now?
No, wait to register. There's no need to register now. You've probably got more than enough to do setting up your business as it is. Just make a note that at some point in the future, when you start to sell your webinars and services outside of the UK, that this legislation is around, and deal with it then. Don't anybody in that position, no, don't create extra work for yourself having to complete VAT returns every quarter with nil, nil, nil. There's enough work. There's enough to do if you're setting up a business without creating more work.
Absolutely. Yeah, brilliant. Yeah, okay, well, thank you very much for that, Noel. Thank you so much for taking the time to put that together and so generously answer everybody's questions. So I've really enjoyed that, and I must admit it's made things so much clearer for me now as well, and I hope it's done the same for everybody else. In fact, judging from the comments we've been getting through about how useful everyone's found it, I'm sure that it's clarified a lot for them all. So just to confirm the recording, I will email a link out to the recording. It will be exactly what I'm going to do is the original page that you clicked on, that you registered on, I will turn that exact same link into the recording page, okay? So if you've got your original emails, and I'll send out another email tomorrow as well with the link to the recording, but you just quite simply need to click the register link and that will take you straight to the recording page, because I'll just update it and change it so that there's a video on there instead. So, and then, Noel, we've been asked several times for the PowerPoint presentation as well. So I said I'd check with you and then send that out, but can't see any issues of sending this out.
No, absolutely fine. If anybody wants that, they're very welcome,
brilliant.
and they can go with it. And as I say, if anybody wants to take me up on the offer of helping them to register, then just send me an email to VAT@Guilford.
Absolutely, yes, yeah, fantastic. Yeah, thank you very much for that. And well, thank you very much for being on for doing this for us, and we'll talk to you soon.
Very good. Good night, everyone.
Yeah, good night. Bye for now.